Beginners traders always sabotage themselves in the foreign exchange market because they do not know how to avoid some certain common mistakes that are very neutral to newbies and even most of the intermediate traders in the foreign exchange market. Welcome to another amazing and yet exciting video brought to you by Learnity. My name is Philip, and in today's video we are going to be going through some common forex trading mistakes that most traders, especially the newbies, tends to face when coming into the forex space. Before I start discussing anything in this video, I would urge you to put away any form of distraction, make sure you pay maximum attention, and make sure you stick to the end of the video. The most common mistakes that we have in the foreign exchange market are numerous, alright, especially between beginner traders and intermediate traders. Alright, and one of the most common mistakes that we usually see that most of these beginners make is taking unnecessary risk. Alright, being in the market doesn't mean, or trading every day doesn't mean that you are going to make profit. And then when trading without stop loss and using high lot sizes, high leverage, and trying to make the quickest money that you can, you might end up sabotaging yourself, because like every other business, trading is not a get rich quick scheme. Alright, it takes time to build, develop on your craft, and get to that point where you are consistently profitable and consistently withdrawing from the market. So one of the greatest mistakes most people do when trading is taking unnecessary risk. Alright, you might hear some people saying trading is gambling. Alright, you're gambling your way out, but in reality, trading is not gambling. If you take calculated risk, over time you are going to definitely be profitable and you're going to be successful with trading. So taking unnecessary risk is not important, and this unnecessary risk involves taking trades with very high lot sizes when you know your accounts cannot carry those type of lot sizes. Not placing stop loss on a trade. Alright, you are entering a position and you're not using your stop loss order. Instead, you are opening up your account for margin call. And last but not the least, using a high leverage when trading. Most of these days, our brokerage firm has given us the ability to use very high leverage, but that does not mean that you must use those high leverage like 1 to 3,000, 1 to 2,000 leverage. It is just multiplying your risk. All right, remember that when you actually increase your leverage, you are actually increasing both your reward and your risk. All right, leverage is a two-edged sword. It can give you as much profit as you want, and it can also take as much capital from your equity. Alright, so you make sure you want to have all this in check and not take unnecessary risk. The other one include breaking your trading rules. Alright, this is one of the most common mistakes even within professional traders. Most time we find them going across their trading rules, breaking their trading rules because their emotion has gotten the best of them. But now what differentiates professional traders from new traders or intermediate traders is that they tend to recognize this pattern and this action and notice that they are breaking their trading rules, and they are able to call themselves back in order. But as a beginner, you might not really know how to study these patterns when you start breaking your trading rules and know how to call yourself back. Now, what you want to do is you want to always journal, alright? Be it in a good trade, in a bad trade, you want to always journal your mood, how you're feeling when you're entering a trade, how you felt when you close the trade, because this will help you understand some certain patterns that you exhibit when you are trading. And now, over time, once you have understood these patterns, you'll be able to know what is happening to you, or if you get stressed out when you're in a trade, you know that this is the type of feeling or this is the type of pattern you feel when you are not trading according to your trade plan, and you'll be able to call yourself back in order. Alright, so another type of trading rules that we tend to break, or most traders tend to break, is not taking profits or closing your trade as you have actually set in your trade plan. Alright, so many traders will have their trade plan of targeting 1 to 50 pips, and when they get to that 1 to 50 pips, they want to hold for more instead of taking partials or taking full profit. Alright, they want to hold for more. And last but not the least, hoping instead of trading logically. Like I said earlier, if you take a trade and you did not close a trade above a particular swing high or swing low, knowing fully well that price could react from that high or that low, then you are not trading with logic. Instead, you are trading with emotions. You are trying to hope that the market will continue moving in that direction, and most of the times you might see the market actually make a quick turn, come back to your entry, or close you out at break even, and you're not making any profit at the end of the day, and you are just stressed out for nothing. Alright, so make sure you are not breaking your trading rules when you are trading. Another is revenge trading, and this is very, very popular, especially when you are stressed out. All right. Revenge trading is just trying to beat the market, trying to go back into the market and trying to make more money in the market, especially after you take a small loss. All right. Revenge trading usually leads to emotional trading, and you start to trade without your emotions in check. You start to, do some illogical things that you are not supposed to do if you are trading with your emotions in check. Because you took a small loss, you want to make back that loss, and when you are trying to recover that loss, you accumulate more losses. Now, instead of you to stop trading for that day or for that session, you try to revenge trade. You try to push the button, you try to make back that loss, and you end up incurring more losses on your account. And sometimes some traders will end up blowing their account. So revenge trading is one of the mistakes that is quite popular in the trading industry, and you want to watch out for that and also avoid revenge trading. And also, revenge trading might lead to what we call over trading, taking too many trades. For example, you might come into a session and you're planning on taking just 1 to 2 trades, and because your first 2 trades were losses, you just want to recover that loss in the next session, maybe the New York session. All right, you want to recover your losses during the New York session. Now, instead of you to stick to a rule that you have actually set before trading, you find yourself breaking that rule and trying to revenge trade because your mind is focused on the loss that you actually had during the London session or the Asian session. Now you find yourself taking extra 3, 4, 5 trades during New York session instead of taking just 1 to 2 trades as your trading rule states. Alright, so once you start revenge trading, you are definitely going to be over trading and taking too many position size within a very short period of time. And it is not guaranteed that when you are trading or when you are over trading and you have too many positions open, you are going to make enough profit. Alright, so many people might open too many positions. That is also called over trading, when you have too many positions open. Alright, trading frequently does not necessarily mean you are going to be profitable in the long run. It is just exposing yourself to too many risks at a short period of time. Alright, so you want to watch out for over trading and make sure you do not over trade. So you need to stick with the statistics and also watch what you trade. And last but not the least is lack of patience. This is usually found within beginner traders, right? Because they're just coming into the market, they have been brainwashed that they can make $10,000 in a day, $5,000 in a day, probably from Instagram, probably from Twitter, probably from YouTube. All right. Yes, it is possible you can make such amounts in a day. Yes, it is very, very possible, but you need to know the level you are at. You need to know your equity size, your position size, your capital. You need to have everything in check before you can be able to bank $10,000 in a day, $5,000 in a day. All right, you're not going to be coming to the market with $1,000 and you want to make $10,000 in a day. The probability of that happening is just 1%. All right, and most traders, especially beginners, do not have the patience to wait for that opportunity to come to them. They always want to get into a trade. They always want to trade because they believe that when you're in a trade, you are going to be making money, or you have the opportunity of making money. And like I said in the previous slide, opening too many positions does not guarantee that all of that positions are going to be profitable. Some might hit your stop loss, some might stop you out at break even, then some might go to your take profit level. All right, so you need to have the patience to wait for your trade to actually form and then get into it. Another form of impatience within trader is trying to jump into a moving train, and instead of them to wait for their trade to come to them, they actually rush to get into the trade. And most times this thing might actually have you go into deep drawdown or use a very wide stop loss instead of the pre-planned stop loss you were going to use. You find yourself using about 50 to 100 pips stop loss instead of a stop loss of 20 to 30 pips that you initially wanted to use. Right, so one thing you want to do with lack of patience, if you are a trader that is experiencing lack of patience, is always do know, you need to have it in the back of your mind that just because you miss a trade doesn't mean that is the end of your trading career. There is always going to be another setup. Even if it's not in that same week, the next week that follows, there is definitely going to be a setup. All right. So in essence, what I'm trying to say here is that these mistakes are common, and almost every trader that got into the foreign exchange market have actually experienced one of these mistakes or all of these mistakes at one point in their trading career or not. Even myself, I experienced most of these mistakes, but what made me get over them is the mastering of self-awareness and self-discipline. That is the only way you are going to be able to avoid these mistakes from repeating themselves over time. So in essence, mastering and developing emotional control and discipline and also self-awareness is very, very important, because they will help you avoid these trading mistakes and you find yourself not doing them again. Because if you cannot be self-aware when you are trading, then you are always going to default your trading rules. You are going to break your trading rules and then find yourself making these mistakes over and over and over again. So whenever you want to trade, you always need to be self-aware. You always need to develop that emotional control, you need to develop that trading discipline that you need, so that you do not find yourself making these mistakes over and over again. So at Learnity, we actually offer mentorship courses that would help you, teach you about all of this: mastering your self-control, mastering self-awareness, developing trading discipline, and the rest of them. Now all you need to do is use the link in the description below, head on to the Learnity homepage, and make sure you subscribe for the mentorship. The mentorship will teach you not just mastering and developing your emotional control, but also we teach you different trading strategies, trading styles that you can use to also trade the market and also develop patience. Because the truth is that most of your trade patterns that you use actually allows you to get into more trades more often than not. So because you are following that pattern or that strategy, it makes you feel like you must take a trade, because it makes you think that you are always going to see a setup. But if you have a defined trading pattern or trading strategy that actually allows you to wait for a specific rule to occur before trading, then you would have that patience. You'll find yourself developing that patience you need when trading. All right, so if you want to register for the mentorship, the link is in the description below. You can use the link, head on to our webpage, and then get yourself registered for the mentorship. And also, there is a 5-day free forex training program ongoing at Learnity, and it is very important because there is a lot of things we are going to talk about on this 5-day free forex training program. And especially if you're a beginner, you're just starting out in the foreign exchange market, you do not want to miss this. I assure you that it is worth every day of the 5 days. All right, so it is worth your time. If you are one who wants to actually know what you are doing in the foreign exchange market, then you need to sign up for this 5-day free forex training program, because it is for free and you're not paying any dime for it. And the things we are going to be discussing in this free forex training program are going to be insightful and educative, and you do not want to miss out. So you can use the link in the description below. Make sure you sign up, save your support, and you do not miss out on this. All right, and also we have the rewards program ongoing at Learnity. If you are one who wants to take part in the rewards program at Learnity, then you can use the link in the description below. Click on that link and you see how to participate in the rewards program, and then also get amazing rewards with us at Learnity. And dear friends, if you've gained something from this video, please do well to give it a thumbs up and make sure you are subscribed so that you do not miss out on our next video on this platform. And until I come your way again, remember to always trade with discipline and trade safe.